Nifty 50 has experienced a notable decline of 3% in January, largely, in fact, driven by FII outflows, and it marks like sort of a pre-budget caution. So what changes or what is it that you expect, in the budget which is going to be tabled this weekend that will, change the game as far as, FII is concerned?
So I think three answers to that: reform, reform, and reform. Because I think this is a perfect platform for the government, because we come off a very tough year. We had the Indo-Pak war, we have the tariffs putting at 50%, geopolitical crisis all over, and FIIs pulling out. So it's been a very challenging year. And on top of it, while we have tamed the inflation, that's hurt nominal GDP growth. So against last year's projection of 10% nominal GDP growth, we are probably, according to the economic survey, going to end up at 8%, which means revenues have gone up, will go up only by that much percentage. So coming off a very tough year, I think if you saw the April to November, the government has managed it well. They've actually stuck to their capex expenditure. They've brought down revenue expenditure, and a bailout by RBI has helped make up the revenue deficit. So from such a perspective, next year, and again I'm referring to the economic survey, right, has laid the path clearly that the economy has now reset itself from a 6.5% floor growth rate to a 7%. That inflation, even RBI in their last policy projected that next April, May, June, inflation will be back up at 4%. So if you are going to do a 7% for next year with about 4% inflation, you're talking about 11% nominal GDP. So I think that the fact that the year gone by was very bad and very tight fiscally, still the government, by reducing revenue and expenditure, is going to meet the fiscal deficit target. I have no doubts about that. So from that perspective, but all of this bad news built into a very, very under-expected budget. Nobody is expecting anything great from the budget. But given the fact that, again, I'm referring to the economic survey, it talked about the geopolitical challenges ahead of India, the fact that the rupee is weakening despite phenomenal macroeconomic stability and strength, both on the risk and on the growth part, despite the rupee has weakened, probably because of FII flows being much, much more than expected. But for next year now, you are now set the base for us to do reforms. The government has another 2.5 years to go before the next election. So putting in place the reforms now, which would pay off in the next 2 years, it's a brilliant time. So I think that the very low expectation means that anything that the budget delivers will be taken positively in the market. It can't get worse than this as a pre-budget set of affairs. So I think that it will turn out to be a good booster overall for the economy.